Grains break to new lows and even some contract lows despite lower crop ratings, flooding in the northwestern Corn Belt, and ahead of some of the biggest USDA reports of the year. Why are funds in sell mode? And cash cattle make record highs, but for how long?
Live from a pecan sandy kind of afternoon, this is AgriTalk. This afternoon we chat with John Heinberg from Total Farm Marketing. Directly following the news, Brian Splitt from agmarket.net. I, the handsome newsman Davis Michelson, and now, filling in for Chip Flory, say hello to Michelle Rook.
And a good afternoon, everyone, from a soggy part of the Midwest. We have had, torrential rains and a lot of historic flooding up here in parts of the northwestern Corn Belt. That is for sure. I'm sure a lot of you have been watching it on the news. So
Torrential. Torrential.
Torrential?
Does that sound right? Does that sound right?
Torrential, correct.
2 R's in torrential, yeah?
Yeah. I think some areas had like up to 18 inches in the course of just a couple of days. Parts of southwestern or southern Minnesota have had the most rain I think they've ever had for this time period. Northern Iowa, parts of southeastern South Dakota into Nebraska. It's been tough for a lot of those areas. So
we spoke with Iowa Secretary of Agriculture Mike Nag this morning on the morning hour, and he's up there doing some traveling around in there. I think he's headed up toward Sioux City, kind of in that Sioux County area. But there are a couple of things going on right in that corner of the world, and that includes some bird flu infections as well. Yeah. Sioux and O'Brien counties in Iowa in particular come to mind.
Yeah, and a lot of HPAI and some of the dairy herds up there. I think they've had quite a few cases. So, a lot. He's busy right now, that's for sure. Well, absolutely, it's not a very good day in the grains, Davis. An ugly day, in fact.
Oof. No, I don't know what to make of it quite. We should probably bring in some sort of analyst or somebody who's familiar with this world to help us. Maybe we'll get a couple guys in here to tell us about it. You have somebody in mind, perhaps, do you?
Yeah. We got some goodies today. We've got both Brian Splitt and John Heinberg is joining us from Total Farm Marketing. So excited about that.
I think that'll be his first visit on AgriTalk, isn't it? Have we talked to John before on air?
I don't know if you have. I talk to John quite regularly. And so it'll be fun to have him on. And you guys, I think he told me this is his first time on AgriTalk, but he'll be all right. He'll be great. He will be awesome. Very good.
I have every faith. You betcha.
Yeah.
But first, let's get to the news. What do you say?
Yeah, I was going to say, talk a little bit about this lower day.
December soft red winter wheat futures opened near session highs and closed near session lows to finish for a lower 7th consecutive session. December SRW has been lower in 17 of the past 19 sessions. December hard red winter wheat futures closed lower for a 9th consecutive session and settled below $6 for the first time since April 2nd. The U.S. winter wheat harvest was 40% complete as of June 23rd. That's 15 points ahead of the 5-year average. The spring wheat crop is rated 71% good to excellent, down from 76% the previous week, but that did nothing to support wheat prices. December HRW wheat futures 5 1/2 cents lower at $5.96. December SRW wheat down 11 1/2 cents to $5.82 3/4. September spring wheat closed at $6.03 1/2, down 9 1/4 cents. I mean, we can talk about the pressure and everything, but when you say things like December soft red wheat has been lower in 17 of the past 19 sessions, Michelle, that sounds like pain to me.
Yeah, well, seasonally it is that time of the year with the harvest going on, but I think new lows for the move at HRW and SRW and more new contract lows in spring wheat today.
Yep. Well, USDA says 69% of the U.S. corn crop was in good to excellent condition as of Sunday. That's down 3 points from the previous week. Corn rated poor to very poor remains relatively low at just 7%, but that is up 2 points from the previous week. The crop deterioration did little to support corn prices, and neither did USDA's announcement the U.S. sold Mexico 22,000 metric tons of old crop and nearly 188,000 metric tons of new crop corn. Traders are positioning for Friday's acreage report and grain stocks reports. Longer term, pro-farmer crop consultant Dr. Michael Cordonier of Soybean and Corn Advisor says up to 1 million harvested corn acres will be lost due to excessive water in northern production areas. September corn futures 7 3/4 cents lower, 4.31 3/4. December corn down 8 3/4 cents to 4.43. March corn futures closed at 4.54. That's down 9 1/4 cents. Excessive water catching up with us here, Michelle.
Yeah, and again, as you mentioned, the market really acts like it doesn't care.
Yeah. Well, USDA says 67% of the U.S. soybean crop is in good to excellent condition. That's down 3 points from the previous week. Beans rated poor to very poor as of June 23rd were at 8%. That's up 3 points from the previous week. That crop deterioration did nothing to stop sellers from giving back all that was gained in the bean market yesterday. November soybean futures opened slightly lower and traded as much as a penny higher before turning back to the downside and closing below yesterday's low. Monday's buying in bean meal also disappeared, but August bean meal posted an inside trading day with an open near session highs and a low range close. August bean oil spiked support at 43 cents before recovering to close just above that level. August soybean futures 15 cents lower, 11.45 and a half. Sept down 18 3/4, 11.11 3/4 at the close. November beans closed at 11.11 1/2. That's down 19 cents. And Michelle, we've got some heat that's moved in here since they were taking these numbers here. I wonder if we're going to see some more deterioration in the crops next week.
It's likely, but again, it doesn't feel like the market is focused on that at all right now.
It's a shame. I've got December cotton 168 points higher today at 75.07. On your livestocks, August fat cattle were 40 cents lower, 184.42 and a half. August feeders up 15 cents to 259.05. And on the snout side, June lean hogs today 95 cents lower at $89 on the snout. Looks like we've got BJ Splitt. Let's head over there now. Michelle?
Yeah, thanks, BJ, for being with us. What, new contract lows in both new crop corn and beans, or am I not reading that right?
All right. BJ, you got to unmute yourself.
Sorry about that. We just have mute issues all the time when I'm on. So, no, not new contract lows. But new lows for the move,
though, huh?
Yes.
Okay.
And so, at the end of May, we were talking about 2009 and wheat and the similarities in the stocks to use and carry out. And so we did some overlay charts, and I actually replied to it with the hashtag of AgriTalk. So anybody listening can go look at that and go on Twitter. But we are following the 2009 pattern in wheat to a T. It suggests we'll probably break into early July and then go sideways as we form a harvest low. And then you're going to get another major leg down in the month of August into the end of September. We've also talked about corn 2014 versus 2024. Absolutely fascinating. When you look at the July contract at the end of June in 2014, it settled at 424 1/4. So here we are, July at 425 1/2 right now as we get to the end of the month. So the scary thing is, well, all right, well, where was front month corn at the end of July in 2014? And that September contract settled at 357. And then by the end of September, we had already traded 320 on the D's contract. So I don't think that the producer should feel like this market's oversold and it needs to bounce and we need to find support and we're going to rally. We may not at all. And especially when you think about 6 million of principal crop acres that were not on the March report, if you just get a chunk of that to come back into the report that we have at the on Friday, and this isn't a report that's what was planted at that point. It's what was planted plus what is still intended to be planted.
Right.
I think the number's going to be bigger.
Oh, don't even say that. All right. Funds have been relentless sellers, though. Let's hope they can take a break here at some point. Thanks so much for joining us, Brian Splitt with agmarket.net. We will take a break. We'll be back with John Heinberg with Total Farm Marketing to talk a little bit more about the ugly day in the grains and those reports coming up here at the end of the week. You're listening to AgriTalk.
In the morning, you're coffeeed up and you're thinking. In the afternoon, you've calmed down, but you're still thinking. We're here all day. AgriTalk.
And welcome back to AgriTalk. I'm Michelle Rook, subbing in for Chip Flory this afternoon. And we're excited to have join us this afternoon John Heinberg with Total Farm Marketing by Stewart-Peterson out of West Bend, Wisconsin. Welcome to the show, John.
I'm glad to be here. Excited for the first time ever on this show.
I didn't know you were a newbie. I figured you'd done this show many a time. So
Let me just say welcome, John. I didn't realize I would have brought the agro welcome mat, but it's at the cleaners actually at the moment. But welcome. We're super glad to have you.
So I'm glad to be here.
No doubt. We probably could have picked a better day for you, a really ugly day in the grains, talking about these new lows for the move and just about everything here again today. The funds are basically selling. They've got their foot on the gas. John, they're just not concerned about this crop or any of the problems that we've talked about in terms of the flooding or the weather or any of that?
Right at this stage, it just seems like the lack of concern in terms of the fund's eyes is there. I mean, they just are watching a crop that is coming together fairly nicely. Again, today on the radar, those areas through Ohio, Indiana, Illinois, which kind of needed some rain, had rain sitting over them all day today. So that rain makes grain mentality, unfortunately, is still kind of driving this market, and it's going to take some time for a lot of these things to shake out. As horrific as the flooding is, and in Iowa, Minnesota, and Dakota's area. Again, when it comes to principal acres and harvest and things of that nature, it's one of those things the market may not find out until we get the combines rolling, or we get in and get some field checks, and then we see truly what was lost. Even though I think we all understand that there's definitely been some yield loss there. But one of the things I've been kind of watching, I was actually on the road for a vacation last week, did some driving through northern Wisconsin all the way up to northern Minnesota for some fishing, and things are looking really good in some of those areas. And last year that was a crop they were trying to keep alive with irrigation, and we got to understand that some of these fringe areas that are getting these beneficial rains are going to produce a better crop than normal, and that won't cover all those bushels that get lost, but it will definitely compensate for some of those bushels lost. And I know that's just not the only area that we can say that about overall.
Yeah. And of course, last year we had drought in over 50% of the country, and we still produced this massive crop. And so it's kind of a prove me thing for the funds here, isn't it?
I would say that's a big part of this too. After last year, and we had the weather that we did have, and then got the yields that we saw, and it was just constantly hearing from producers, well, this is a lot better than I thought, was the comments as the combines got rolling. The funds are looking at this thing as possibly fairly bulletproof here. And then realistically, we don't have any major drought on the maps right now. I know we've been dealing with some hot temperatures and dry conditions that stressed a crop through Illinois, Indiana, and Ohio the last 2 weeks here, but again, now they're getting some rain. So the market at this time frame, at least in terms of the money flow, is really in that prove it mentality. And what we're seeing in front of us here, at least in terms of weather conditions, things along those lines, are basically agreeing with that mentality that we have to prove that there's some problems out there.
Yeah. How much loss do we think there is going to be in the Northwestern Corn Belt due to flooding? I saw some estimates, maybe 0.5 to 1 million acres. Does that move the meter at all?
When you're talking a 90 million acre crop or 91, we'll find that out on Friday. And, I'm kind of in Brian's camp, as he mentioned a bit ago, too, that, we had 6 million acres we were missing that might show up here a little bit on that report Friday. So that makes me a little anxious, but if we lose 1 million acres, that's a big punch. And, how many how many million bushels is that? But if we're looking at an overall picture of a 15 billion bushel crop, a few hundred million off of that is not as significant in that type of a window until we truly see that, where that number is. And I think that's truly what the market is kind of focused on right now. If you remember when we had the derecho in 2020, the market still went down because we got rainfall out of that. It wasn't until we got into August and September, and when we really started getting out in those fields, and we realized, hey, we got a problem here through central Iowa.
Yeah. And unfortunately, these aren't going to be acres that aren't show up as unplanted. They're still going to show up as acres on the report on Friday. They will show up as unharvested acres later in the season if they're out at all.
Yeah, very much so. I mean, we won't see those numbers probably until we get some of the FSA data in terms of, or the risk management data with the prevent plant, or we actually just see those acres lost when we get into the September, report in terms of, harvested acres. So that's going to be, again, one of those things that we may trade it eventually, but right now it's not in the market's front burner in terms of an issue. Plus, just hitting the time of year, the seasonal window that it did too, just really has the market looking past it at this time frame, as the sellers are still strongly in control. So, again, on that report, that report was put together on June 1st. Again, remember what that question is, and Brian mentioned it too. It's what do you intend to plant? And so those numbers are still going to be fairly elevated on June 1st, even though we had some wetness and concerns in a lot of areas. Guys were still probably intending to get those corn acres in or get those soybean acres in. It wasn't until after we got through the middle of the month that some of those decisions to pull the plug probably came into play. So again, another one of these reports that's going to come out may have some inaccuracies in it because of just the way the system is put together that may not get shaken out until we get the final numbers in September.
Yeah. And prevent plant acres usually don't show up until the August FSA report. And how do we ever account for some of the replanted acres?
Very much so. And sometimes those FSA numbers and compared to what USDA has, there's some discrepancies that occur there based on the reporting procedures as well. So again, it's going to be unfortunately a thing that's going to have a long tail to it in terms of determining what the final yields are and things of that nature. It may take us well into the first of the year when we get those final January numbers, and then we know they can adjust those the following September. So it's going to be one of these processes. I hate to say it's going to take some time. And by the time we work through things, some of the punch from it may all be kind of in the wash in terms of how the process works.
Yeah, we did actually get some of the initial estimates out here for acreage, depending on, I guess, which firm that you look at. But generally, we're looking at more acres of everything, but like 250 to 300,000 more acres of corn, another 250 to 350,000 acres of beans. Does that sound about right, or where are you at? Where's your head?
I'm a little nervous that corn number could come in a little bit higher. And I mean, now the top of the range was 91.3 million acres of corn. And, maybe we get this to 91 and add 1 million acres from where we were back in the March prospective plannings report. Again, I still very curious where that 6 million acres went to off that March report. And does that come back into the picture, here in June? Or does it come into the picture and become prevented planted acres by the time we get to September? So those things are kind of on my mind. Maybe that's on the market's mind. That's some of the reason why we're seeing prices push. Now, historically, corn acres does have a tendency to go up on this report, but soybean acres usually comes in below expectations, has done that really since 2015, and so that's something we're going to have to kind of watch for. Now, with the planning of the wet weather, already there's some market mindset that we could see some more soy acres if corn acres got shifted over. Going into this report, it's going to be a mixed bag. And I think, like I said, right now the market obviously is leaning very negative with more acres coming. So we could set ourselves up for good surprises in terms of what could be one of the more volatile, if not the most volatile report the USDA puts out on a yearly basis.
Yeah, and historically, that has been proven out in the past, hasn't it?
Yeah, it has. And this is the goalpost setter for the entire summer here for terms of corn and soybean production. And, now everything off of this report in terms of yield, in terms of production, and, the final carryout numbers are all going to be based off this acre number that's coming out here on Friday. So it's a key report. And if there's any discrepancies that really change the focus of the market or the supply side of the market, you're going to see the market react accordingly and fairly aggressively. So, it's going to be kind of one of those reports that we're really kind of anxious about, because if we do get that bearish surprise on top of this type of a week, what's going to be the reaction? Now, part of me in my mind is also saying, hey, we're pricing a lot of pretty negative news in here. Not saying we're going to see a turn in the market, but if we get a number that comes in line with expectations and doesn't, really give us any new bullish or bearish news, you could see some price recovery just because of the fact that we're at the end of the month, end of the quarter, going into the 4th of July, and maybe we get some price recovery. That's probably going to be met with selling pressure because of, again, the overall picture is still going to stay relatively on the bearish side.
And John, we're not going to be able to get into all of the meat of this, but quarterly stocks will also be very important here. We always make so much out of the acreage figures, but really when you look at the average trade guesses on quarterly stocks, everything is going to be bigger in terms of inventory than a year ago, right?
Yeah, and that's expected, and most of it will be focused on the corn side. The bean side, we know the shipments and we know the crush. Corn, we've got that feed factor that comes into play. So we'll have to see how that shapes up. And, in terms of the marketplace in general, maybe we got more disappearance than we thought over that first half of the year. So that'll be a key number as we go into that report on Friday.
Yeah, I want to dig a little bit more into the quarterly stocks report, especially because we've had strong basis levels and especially corn out in the country. And so we'll talk a little bit more about Does that signal something for the quarterly stocks report? John Heinberg, Total Farm Marketing, joining us as our guest today. We'll be back with him right after the break. You're listening to AgriTalk.
Let's go to the markets page at profarmer.com and check today's closes. For December, hard red winter wheat futures were 5 1/2 cents lower at $5.96. December SRW wheat down 11 1/2 cents to $5.82 3/4. September corn futures were 7 3/4 cents lower on the day at $4.31 3/4. December corn down 8 3/4 cents to $4.43. August soybean futures 15 cents lower on the day, 11.45 1/2. November beans closed at 11.11 1/2. That's down 19 cents on the day. December cotton today 168 points higher, 75.07. On your livestock, August fat cattle today were 40 cents lower, 184.42 1/2. August feeder futures up 15 cents to 259.05, and June lean hogs today 95 cents lower at $89 on the snout. Get more market news every day. Visit tryprofarmer.com. Opinions expressed on AgriTalk do not necessarily reflect the views of Farm Journal Broadcasting, affiliate stations, or sponsors. You're listening to AgriTalk, where the conversation begins. Join us at 855-4-TALK-AG.
And welcome back if you're just joining us. I'm Michelle Rook in for Chip Flory this afternoon, and we're visiting with John Heinberg with Total Farm Marketing by Stewart-Peterson out of West Bend, Wisconsin. Well, John, before we took the break, we were talking about USDA's quarterly stocks report, which I always feel is kind of like the Rodney Dangerfield, basically, of the reports that we get out from USDA. But while we're expecting corn, soybeans, wheat stocks to all be above a year ago, is it possible we could get a surprise with this report? Just because, at least on corn, we have had such strong basis levels in the country.
Yeah, when we start looking at the numbers year over year, we're looking about 700 million bushels more corn, actually about 770 year over year. Soybeans about 170 million more bushels in terms of those grain stocks. Now, of the two, we could find more surprises on the corn side because, again, typically in the soybean side, we know what the exports are. You know what the crush is. There's, other than some of the residual and type movements, those numbers are pretty solid, and we have a good idea on what the disappearance has been. On the corn side, obviously, we know what the ethanol number is, which has been running fairly friendly. Obviously, exports have been right where we need them to be, maybe a click ahead here over the last month or two, so that's going to at least see that disappearance work there. Then it comes down to feed usage and where we are in that regard. Now, we are feeding lower numbers of cattle, but we're feeding some pretty heavy weights out there. We saw some strong placement numbers here as we got into the spring months. So who knows what that corn usage side on the feed usage could be in that picture, and that's somewhere we can set up some surprises, too, and just sometimes the typical adjustments the USDA likes to make. So, as you said, the grain stocks number is kind of the number that everybody kind of puts on the back burner, but sometimes it can throw some curveballs in there that can really move a market. If a market is off by a couple 100 million bushels in terms of its anticipated stocks, that's going to move price one way or another. So that'll be one of the key things, and if the numbers for acres come in fairly in line with expectations, it might be the grain stocks that could have that bit of a surprise in there, as some of that disappearance in usage could come in a little bit better than the market anticipates.
Yeah. So, a lot of people say that the basis doesn't lie. And I guess I'm wondering, as strong as corn basis levels have been, and as much inventory as we know is in storage in farmers' hands, have you been surprised at how strong basis levels have been, especially when you've got a 2 billion bushel carry out looking at you or staring at you on corn?
Yeah, I have been. But again, that kind of reflects some of the usage that we've been seeing. That ethanol grind has been very good. And, we've been shipping things out on the export front, export inspections over 1 million metric tons again this week. So it tells us that we're at least using some of those supplies up. You add into the fact that a lot of producers are just having a very difficult time selling at these price levels. They don't want to pull the trigger. They want the market to encourage them to pull a little bit out, or if they're making sales, it's more as a cash needed type basis where they have to get some grain moving just to keep expense flows moving in that regard. So that's kind of backing up the system. I get a little fearful where we are, and I do think that's a big factor this week. Is here we are, it's July, or at the end of first notice day for July is coming at us. Basis contracts need to be closed out if anybody's sitting on a July basis contract, or they need to roll them out to September. Well, most of these have already been probably rolled from December to March and now to July. And the market knows that those contracts are out there and they go after the weakest long. In this case, it happens to be the producer sitting on those bushels. If we see a flood of pricing here in the next couple of days as those basis windows are closing, it wouldn't surprise me. If we see a lot of movement out to September, that really makes me anxious there, because then we get to a September window where the producer doesn't have a choice. They'll have to move the bushels and make sure they got room for the new crop that's coming in, as long as they're in a good production area. So I do think that's a big factor this week, like we saw at the end of November for those December contracts, February for the March contracts, a little bit of weakness in the May contracts, but definitely seeing that weakness here as we get these July contracts off the books.
Yeah, like you said, end of February, that was a bloodbath when we hit the new lows there in corn. Soybeans, I guess I'm wondering, exports I know are behind from a demand standpoint. What's your sense of crush right now? It looks like crush has picked up. We had record NOPA figure this last month. The bull spreads have been working. It does look like maybe there's some end user demand there.
Yeah, and a little different picture in that soybean market. From just talking to producers, most of the beans have moved. They're already into the system. They're in the end user's hands or the commercial's hands, and that's why we're seeing a little bit of strength coming in these front months, as we've had a little uptick of demand here, whether that's reflective of what's going on in Brazil with their weather or their producers just holding tight on the supplies. We've seen some sales kick in here. We had that soybean meal sale yesterday and just as encouraging in the front half of the months. And we're watching the bull spreads. July over November has moved out to 50 cents here over the last handful of weeks, and seeing that strength in that front end just maybe tells us that, number one, supply is not sitting in a producer hand. So when we get a rally, the market moves and we limit that rally by producer selling. B, that end users want a little bit more, so they're willing to chase it and lift that futures market up in front to try to encourage some more cash sales, or possibly that supply of beans isn't out there like we think it is. And, we'll see how that comes together down the road in terms of some of these grain stocks numbers, any yield adjustments that need to be made, from last year. Typically that's done in that September grain stocks numbers. So at least the bean market from that standpoint. Now we struggle, like today, down 15, 16 cents on July, almost 20 cents on November, just because we're still trying to compete against those cheaper South American beans, and we're still struggling in that regard. And bean price, the bean basis levels are coming down in Brazil, which again just makes it harder for us to get that business moving, and the market feels like it has to stay in contact with those Brazil and Argentina prices.
Yeah, no doubt. Although with what has been going on in the meal market, is that a little bit of a signal that maybe that crop is a little bit shorter, or you see those quality issues in Brazil and Argentina?
The meal market's a little bit of a different story too, because of the way crush is going here. Because when they crush beans for oil and the oil side of it, they're getting about 4 times as much meal out of there as a product. So they have to move that meal fairly aggressively, meet domestic needs, and then get that out onto the export market. And I expect to see more bean meal sales come at us here, especially if we do have a little bit tighter supply coming out of Brazil. The Argentina supply looks good, but U.S. meal is still very well wanted by the global marketplace, and it was we saw that sale to the Philippines yesterday, which is very encouraging. Again, I kind of like the front month meal as well here, maybe against the deferred, at least if we do have a little bit tighter supply here, that we could keep that market a little bit more active, especially as we start getting this July contract off the books, and now we shift our meal focuses to that August contract.
Yeah, well, we followed meal yesterday with that $11 rally and put that nice reversal in soybeans, only to negate it today, right?
Yeah, again, that was a very disappointing day in that soybean market, and it really even was in corn today too. But
yeah,
just not holding on to that late afternoon weakness. Corn went down, took out that Feb low, climbed back above it, and actually looked like December corn finished fairly well. Only today just to quickly blink the eyes and blow right through that lower level again. Same thing with soybeans here today. You just saw that pop in that market because of that meal sale. Had the market kind of cranked up about things, but then we got those crop ratings shifted back to the weather, and again just the thought of just ongoing supplies and continuing to grow, and then especially in soybeans, that lack of export numbers that are out there just makes it very hard for that market to rally, because if we can't sell it at these price levels, we can't rally it and sell that meal, the oil, the beans at a higher price level.
Yeah. So we did technical damage today in corn and beans. So where do you find the next support areas here on the charts?
First off, just looking at corn, with December breaking through that low today, closing well below that previous low at 443, feels like we're on our way to at least go test the 4.25 window. A $4 target is out there for me, just on the psychological side, kind of watching how we handle the next couple of days here with that July contract. Pretty good support here at 425. If, maybe this is a spot it can dig its heels in and, get some lift. If we get some bull spreading in that market, that'll at least support that back end a little bit. Soybeans charts just look scary to me, especially with the move here today. I know obviously the next target is going to be that $11 handle. I do see some support around 1090, 1087 on some of the historical charts on that November contract. A little nervous if we close the week through the $11 window, because it just seems like there's not a lot of resistance from 11 to 10 and vice versa from 10 to 11. So I'm not sure if the market's ready to make that move now, because obviously beans are made in August and we got a lot of time in front of us there. So I'm hoping that we can find some good psychological support at that time frame. Lastly, the week contract, that 550 low from March is out there for that September contract. So if that don't hold, it sure feels like we got to move down to the $5 handle. And again, that we haven't touched on wheat, but good harvest for KC going on ahead of schedule. It sounds like we got a good SRW crop coming in, and then some of that Russian news is kind of tempered, and it's really just allowed the sellers to put the foot down and just drive this wheat price down. The biggest thing is we never saw the bump in export demand that we were hoping to see because of the Russian news, and now we've got wheat supplies coming in with the same amount or less demand than anticipated.
Yeah, and we're down like over $1 in the last 3 weeks in the wheat market. But John, it's pretty tough to bottom that market until you get the harvest at least 50% or more done, right?
Correct, very much so, because right now that harvest pressure is rampant, and that just keeps the sellers extremely active as we're pushing those supplies into the pipeline.
Yeah, and then the European wheat price has collapsed as well, has it not? Have we been following that market?
Yeah, we have. And that's been one of the movers when we first saw the European wheat prices kick in. That's when the U.S. prices kind of took a step behind it and followed it up. And again, we saw some of the concerns regarding that Russian wheat crop have kind of tempered here. Still going to see some reduced crop. But again, the chatter just that, hey, the frozen crop that got replanted, we're still going to see decent harvest. Plus, they are in their harvest window now as well. So those are hitting the pipeline, adding to that hedge pressure we see globally.
Yeah, and they haven't backed off of their wheat exporting either. So we have to see that first before you can kind of turn this market, right?
Very much so. We need to actually see some pullback in that market on the export side.
Okay. Well, one market that has been doing stellar has been cattle, cash cattle hitting record prices this week. We'll talk a little bit more about how long that can last coming up here on AgriTalk.
On your favorite radio station or your preferred digital device, AgriTalk is live every weekday.
And welcome back to AgriTalk. I'm Michelle Rook in for Chip Flory this afternoon. John Heinberg with Total Farm Marketing has been joining us. And well, we got the bad news part of the market out of the way, which was the grain trade here, John. But cattle market, we made some new highs for the move again in the June contract and the live cattle futures here today. Cash trade a record 194.84 this week. Are we going to continue to see these record cash trades every week, you think now? Are we getting into the tightest part of this market?
It sure feels like it at this time frame, and there's other things that are going in play here too. You go look at retail values up again at midday today, 323 on that choice carcass. So there's still meat on the bone for the packer to continue to put out those bids as long as the retail prices stay firm. Now we got to kind of watch here. We're getting through the buying window for probably the 4th of July, so maybe we start seeing retail soften. But let's go to the historical side of things. June contract comes off this week. June is trading, at a fairly steep discount to that cash market, about a $5 discount. You got August trading a $5 discount to the June. So really that August contract is going to take over here next week and look relatively cheap according to that June price. That's some of the reason I think the market didn't move a whole lot today is just the fact that we're getting to June expiration and we're seeing that movement as we get out of those June futures here. But this is a window here too. After June gets passed, August is typically strong through the month of July. You look at the historical side of it and the trends that are there. And I think we got a chance this August contract can climb right back into where June came off here. I really do like the bull spreads right now in the cattle market, buying that August contract versus a December, for two different ways. Number one, if you got some cattle moving, you get a little reownership into that front end of the market. At the same time, you're hedging up back 186 in December. And with that placement number we got on that last cattle on feed, whether we believe it or not, it seemed a little out of skew for me there. But there's going to be some cattle on the back end that might have to be dealt with, and that's a pretty good value longer term. So that's one of the things I've been looking at for producers right now, is this kind of playing that spread at the same time. And if this cash trade can continue to chalk higher, that August contract's going to stay with it.
Although futures have been slow to respond and the funds have not piled in here near to the degree that they were before we started having all the bird flu news come out. So, what do you think it's going to take to get the funds to come back in here? I think they're at half of the level they were when they were at their record. I think about 52,000 contracts long.
Yes, it was a little over 51,000 on the commitment of traders. That was back to June 18th. It was delayed to yesterday because of the Juneteenth holiday last week. So now the commitment of traders getting put together this afternoon. We'll get that on Friday. So we'll see. But at least the money's starting to move into that cattle market. I do think the bird flu headlines have made them very, very cautious. I do think just concerns regarding the U.S. consumer. Can they afford to pay for this high-priced beef? Has got them cautious at the same time. But here we are. There's the retail demand is still there. Prices are still climbing, and exports even haven't been that poor here as well. We've been seeing some decent movement on the product side of things. So it looks like this market's got some room in it. Now we are lofty, and it won't take much to get things to fall apart very quickly too. So producers need to be active in this area, protecting value and keeping it in front of you at this time frame. This is a great market for put strategies because obviously you got a floor underneath. If it falls apart, that will work for you. But you keep your cattle open if this cash market continues to reward you in that regard. So, but it's a cautious market for me right now. But I do just like the window that we're in, at least into the month of July here, that I think we can see that that August contract kind of continue to stride out. Maybe even pass over top that December and get some premium. We're trading $4, $5, $6 behind December here just a couple weeks ago.
Yeah. Do you think you're getting any end of the month or end of the quarter profit taking, because the funds have had some nice profits here for the last month or so?
I would agree with that too. Again, that's something that's going to come into play as we get into the last couple of days of the week here, and then obviously too, when the June contract comes off, anybody that's still in that position is moving it around. So again, that may have been what was reflected in the market a little bit today. Any June hedges are now August hedges. That type of movement. So it's going to bring a little bit of volatility into the market. I think the biggest thing we're going to focus on: where does cash go this week? If we continue to add to that total from last week, you're going to see this market fairly aggressively probably move higher again on Monday, because now we're looking at an August contract trading, and if cash goes up another couple bucks this week, $10, $12 discount to the cash market with a month and a half until the August contract comes off. Again, just looks a little bit undervalued here. Then throw in, we haven't talked about it yet, the hot weather that's coming across cattle country and that's been forecasted. What does that do to the weights? What does that do to the slaughter numbers? Things of that nature. Do we get some cattle getting pulled forward? One of the things that's kind of kept a lid on this market too has been the heavier cattle weights and the product that they've been producing. Does that start to lighten up here as we get into the heat of summer?
Yeah, I think they've been running like almost 40 some pounds over a year ago. So that's been a function of this really good feeding weather. So maybe we can start getting that as a benefit as well, don't you think?
Yeah, very much so. And, because cattle just don't like that when it's hot and muggy, they aren't moving, they aren't eating, they aren't growing to the level they need to be. If the cash market looks supportive, I wouldn't be shocked. We see some cattle get pulled ahead. See some of them weights start coming down as producers want to take advantage of that strong cash.
You bet. Okay, John, thanks for joining us. I really appreciate it. How can folks get in touch with you if they want more information?
Love chat with them anytime. Give me a call, 800-334-9779. Shoot me an email at johnh@totalfarmmarketing.com. And don't forget that website of ours, totalfarmmarketing.com.
You bet. And we're going to bring Davis back in to look at our weather.
Well, you bet, Michelle. The 6 to 10 day temperature outlook, according to the National Weather Service, this gets us up through June 30 through July 4. Is that right? Yeah. It looks like below normal temperatures expected right across, let's just call it the Canadian border. It's going to get clear down into South Dakota, most of Montana there, covered by that below normal temperature outlook. There's a strip of near normal kind of right through there, and then parts south. Let's call it from about Des Moines in a line across the nation and southward. We're looking at above normal temperatures in the 6 to 10 day outlook. The hottest there is going to be down in Louisiana, Georgia, the Carolinas, and Florida. 6 to 10 day precip outlook. Over the most of the Corn Belt, looks like we're expecting above normal precipitation in the next 6 to 10 days, with some spots of below normal in the west, in Texas, and on the eastern seaboard. Michelle.
Yeah, thanks for joining us. Davis, what do you got going on tomorrow morning on AgriTalk?
All kinds of exciting stuff. So exciting. I don't even want to let the cat out of the bag. Just be here, 10:06 Central, gang.
All right.